getting you top picks for making wealth as well as, of course, quick technical recommendations. So let's get started with the show. Today, the stocks that we'll be discussing: AB Capital, PTC, as well as result candidate SpiceJet will be discussed today on the show.
Well, not just that, we also have our portfolio advisor segment. So today, T. Radhakrishna's portfolio will be discussed. Let's bring on board our guests who will be guiding us over the next 30 minutes on the fundamentals. Vikas Sethi, MD Sethi Finma, joins in. And on the technicals, we have with us Ashish Kayal, founder and CEO, Waves Strategy Advisors. Well, great to have you both on the show. Thanks so much for joining in. Let's get on board. Our first question for the day. This comes in from S. Nagabhushan from Andhra Pradesh. It's a question saying, I've bought 1,000 shares of AB Capital at a price point of 193. Is it a good time to hold on or sell? My strategy is for the long term. Well, let's get in a view as to how, Vikas, you're looking at this stock based on the overall fundamental setup. You did have a pretty phenomenal set of earnings coming in. In fact, the net profits doubled to a good 208 crore rupees. And pretty much on all parameters, it was a good set of numbers. The AUMs in the MF business was up a good 27%. There was strong focus on the retail and the high margin business. But let's focus on the query at hand. And our investor here is losing out quite heftily. A recent listing, how are you looking at this one? And do you think that the prospects are intact for the long haul?
I like the stock. The results declared by the company recently were pretty good. They had beaten market expectations on all parameters, and after that we had seen some recovery in the stock. But the investor has bought it at a high price, is sitting on some losses, but it's fundamentally a very good stock. I would recommend him to hold on to the stock from a long term point of view. I think we could certainly see levels of around 250 in about a year.
Okay, the fundamentals may look good, but unfortunately for this stock, since the time of its listing, it's really lost money, not done very well. Ashish, I understand you may not have much of a chart pattern to follow, seeing as it was listed just in about September or October of last year. It's losing money for our investor. What would you advise him to do?
Hi, see, the overall trend for the stock after the listing has been negative. But one thing that one can consider is that it went to the zone of 143 to 145, and from where we saw some kind of a positive traction happening. So there is a possibility that it might be in the process of consolidation, it might be in the process of accumulation at current levels. And I would suggest him to hold, but with a very strict stop loss of 145, because if that is taken out, again the downtrend will resume. So you use 145 as a very strict stop loss. And from short-term perspective, 165 is what he can expect, and if he can hold on for at least 2 years' time, I think there can be much higher levels can be expected, but hold with a strict stop loss.
Okay, do remember to keep some of those important levels in mind when you're looking at AB Capital. Strict stop loss at a level of 145, a target is 165, and so the call, all in all, is that you can stay invested. Well, next up, we've got our second query as well from Mr. S. Nagabhushan, and this time it's coming in on PFC. Well, here he's holding shares, he's holding close to 2,300 shares of PFC, or 3,000 shares, pardon me. He's bought it at 118. Now he wants to know, does it make sense for him to stay invested or should he completely book out? Well, let's understand, Ashish, first up as to how you're looking at the overall chart pattern. PFC, how are you reading into this one based on the kind of move that we've seen of late? It's currently trading at about 83 rupees, and you know, the last 6 months, so to speak, have been very wobbly for the stock. It's lost quite a bit. It's been on a downward slide, which is why our investor here is bleeding quite phenomenally on his investment. He's bought it at a level of 118. For those of the other viewers who are watching who are in the same boat, what are you advising?
See, I completely agree with you that the stock has moved down drastically, and if you look at it, it made a high around 148 in the month of November 2017. From there, we can clearly see that the overall broader market and the index has, on a net basis, has either moved upwards or sideways. But this stock has broken from 150 levels to and made a low around 80. That shows a very sharp depreciation in the capital of investment that is done. So I would suggest that it's better to be out from such kind of a stocks, and one should always have an exit strategy in place, because unless you have that, you will not be able to make your money either in trading or investment. PFC does not show any kind of a promising picture right now. There is no positive breakout. there is not even an attempt to show any kind of a positive move. So it's best to be out from this stock. Move on to something like CESC, where we can clearly see that at least the long term to medium term trend is intact. Short term can be consolidation, but at least the long term is intact. Best to be out of PFC right now.
Okay, there you have it. PFC is an exit strategy according to Ashish Kyal. Let's also just get in a fundamental perspective on the stock. And you know, because this stock is in a space, well, not directly in the space, but it is very much influenced by the power sector, which of course has been plagued by several problems. What would you advise him to do when it comes to PFC?
Yeah, Mobina, actually, I'm also not bullish on PFC that way, but I feel the stock has been beaten down badly. It's come down to levels of 82, 83, and now the stock offers a pretty good dividend yield, and with the kind of focus which the government has on power sector, the reforms which are being carried out, I think from the current levels it could certainly go up. So I would not recommend a sell on the stock at the current levels. I would recommend that the investor holds on to his current investments, and I have a target of around 110 rupees in a year. So I think he may not be able to recover his losses soon, but then he can certainly trim his losses. So he would, I would advise him to hold on to the stock and exit the stock if it sees levels of around 110 in a year's time.
Okay, there you have it. PFC, both of our experts, Ashish more particularly does have an exit strategy. And that, of course, was a fundamental perspective coming in. Next up, we have a query coming in from Suraj Bhatt from Pune. He says he has 196 shares which he's purchased of SpiceJet. He's bought it at 141 rupees, and now he wants to know if he must hold or sell. Remember, SpiceJet delivered its Q4 numbers, and it looked like a good set of numbers. On the revenue front, it did extremely well, but then, you know, the entire rise in crude prices bit did get to the margins. Profitability as well was good, and most importantly, the load factor managed to touch a record high. That in itself is a strong indication of SpiceJet. Vikas, first to you then, how exactly do you view SpiceJet in the aviation space, especially when we are seeing the market leader Indigo at this point of time plagued with its own internal problems?
Yeah, Mobina, as far as SpiceJet is concerned, it declared its numbers. The numbers were pretty good. The stock also did some, posted some gains, but then I feel at the current levels it would be better to hold on to the stock. It's a good discretionary spend story. Most of the airlines companies are doing well. The passenger load factor is also good. The only cause of concern would be the rise in crude prices, but then I think they would also settle down at the current levels and would not go up from here. So I continue to remain bullish on aviation stocks, and at the current levels, when the stock has corrected from its recent highs, I think it would be a good strategy to hold on to the stock. So I would recommend a hold on the stock.
Okay, likely to fly high. That's the word coming in from Vikas Sethi. Well, at least he recommends a hold on the stock. Remember, we've seen the third successive profitable year for the company. It's delivered its highest ever annual profit as well. And the load factor was at a record high, this time in Q4 at about 95%. Let's also get in a view as to what exactly the technicals are showing, whether or not they're mirroring the fundamentals. Does it make sense to stay invested from a long-term standpoint? So, Ashish, going to come to you with respect to that. Not a bad move. It's been in consolidation mode over the last 6 months or so. What exactly would you advise? Do you think it's likely to remain in a range, or are you going to see some sort of a decisive up move?
See, the overall trend for SpiceJet, we have seen a wave up from 55 levels to the levels of 150. And please note that whenever we see such kind of a sharp rally, there is always a possibility of some correction which is happening in the form of wave 2. And that is what we are seeing. I think this should be used as a buying opportunity. There can be some short-term hindrance, but if someone can look at the horizon of maybe 6 months or 1 year, at least 1 year maybe, there is a possibility we can see the stock surpassing 160 and rallying back on the upside. The rally or the up move in the crude prices are also resulting into some kind of a decline in the stock, but that's only temporary. I think it's going to eventually outperform, and we are going to see the levels of 160. On downside, use 105 as a very, very strict stop loss from investment perspective.
All right, there you have it. That's SpiceJet for you. We'll do one thing. We'll take a very short break right here on the show, but don't go anywhere because we're going to be addressing the portfolio with 12 stocks that belongs to a retired investor. Stay tuned.